This has been a big economic data week, and obviously we saw the market wobble quite a bit on Tuesday, but then we were over it Wednesday. We look to be somewhat over it today. I don't think yet that there are enough data points in a row to scare investors out of what continues to be this momentum-y late cycle market environment. And so far, that's probably okay. The thing that is getting somewhat troublesome for me is that we continue to say, well, the labor market is strong, therefore the consumer is strong. And now, if this retail sales number is not just a blip on the radar, we're starting to see cracks in consumer spending. So perhaps the labor market numbers that we get are not really representing the true sentiment that's out there. And I think that's a decent possibility.
So for Fed watchers out there, can they kind of extrapolate here and say, maybe the Fed needs to get moving here to kind of help the consumer here if we get much more data like this?
My short answer to that is no.
Okay. That's good. We like it.
What's interesting is the Fed has said even this week that there's been a decent amount of Fed speak. And what you've heard from them is that we expected this. We expected there to be a little bit of an uptick in inflation. So this is still in line with our projections. Here's the thing about the Fed, too. They're not going to change their tune because they don't have to. This actually proves that they were right. At least the CPI data proves that they were right. The last message that we got from Jerome Powell was something along the lines of, we are not yet confident enough to start cutting rates, which is what took that March rate cut off the table. And that was probably the right thing to do. So the odds of a May cut have increased slightly, but we're still at about a 50-50 probability. That's a coin toss. That still proves that the Fed was right to say we should wait. We're not there yet.
Okay, Liz, I'm going to cut to the chase, and I think a lot of people don't know this. It's great. We talk about belt and suspenders. We got a lot of Wall Street firms like that. Liz Young's never worn a belt. She's never worn suspenders. I mean, it's digital, it's new. But what this is really about, Liz, is your leadership is Anthony Noto. Once, years ago, he's at Goldman Sachs years ago.
Yeah.
I'm like, who is this guy? Because you're reading it, 14-page documents, and you got to read every page of Anthony Noto. Then he goes to the NFL.
Yep.
Then he wanders by Twitter for a cup of coffee, and he goes, I got to work with Liz Young.
Yep.
So I got Anthony Noto and I got Liz Young over at SoFi doing the modern thing. Do we underestimate Liz Young, the modern thing, which Noto's done for decades? Do we underestimate our technology? Do we underestimate our productivity on top of that technology?
Well, I don't think investors are underestimating it necessarily. I mean, obviously, we've seen a lot of money flow into these themes that are very progressive for the next 5 to 10 years. One of the things that we have the benefit of at SoFi is this unique ability to see investors and see consumers through all stages of their journey. So we can start with the student loan piece of it. We can then graduate them into banking. Then we graduate into mortgages. We talk about investing, saving for your future, saving for retirement. There are all sorts of things that we get a lens into. And we continue to grow that member base, which is great. And I think that there are a lot of consumers out there that are appreciating that progressive approach to managing your finances. Now, are we underestimating the power of productivity if we just shift over to investing to some degree? I don't think we're underestimating it. The issue that I have with the productivity argument is that you'll hear that a lot, right? We can still have GDP grow if productivity grows, and it shouldn't increase inflation too much. The pushback that I would give is that if you look at the AI theme, for example, so if your thesis is that AI is what's going to help grow productivity, look at how much the companies that have benefited from this AI boost are spending on AI. If they're spending and investing that much on that new theme, their costs are rising. Eventually prices go up. So it does all bleed through. I do think it still grows inflation, at least in the near to medium term.
Liz, Paul Sweeney aged this morning. We had somebody in here telling me I got to rebalance, sell my Microsoft, sell my NVIDIA, sell my Magnificent Seven. It's SoFi. Are you rebalancing out of the stocks that Anthony Noto covered for years?
I wouldn't say we're not telling people that they have to rebalance. The only way that I can really answer that for our platform is what's going on in our robo-advisor and the models that we have there. And we do make sure that we're not overly concentrated in any one or two names. So you'll see us underweight some of those Mag 7 in those models just by nature of making sure that concentration isn't too much and exposing people too much to those bets. But investors obviously can do whatever they'd like with their own portfolios. And what we've seen so far is that there's still a lot of this late cycle behavior, which breeds FOMO, and you see people chasing the momentum trade. So I think that's happening across all platforms, and it continues to happen because so far there really hasn't been a huge reason to not believe in it. But I do think that as some of this data stacks up, if it continues on this trend where we've got hotter CPI, cooler retail spending, that starts to bleed over into earnings in the next quarter or two. As that data stacks up, you'll see people start to rejigger some of their investments and rethink the thesis that that's based on.